Capital Partners. And right now, I'd like to introduce our moderator, Dave Gambasini. He is the CCIM New England president. Dave is a principal of Excel Capital Partners based in Bedford, focuses on identifying and securing equity and non-traditional debt from $5 million to $50 million for commercial real estate developments throughout the Northeast and across the U.S. And I give you Dave Gambasini.
Excellent. Well done, Rick. Appreciate it. Thank you very much. As Rick said, I am president of the New England CCIM chapter and principal with Excel Capital Partners. Really a big shout out to New England Real Estate Journal. As the New England chapter, we had a lot of ambitious plans for face-to-face meetings and events and programs this year. And obviously it kind of went to hell in a handbucket. So it's taken us a while to sort out what to do electronically, and Rick has done a fantastic job. For anybody in the audience who is considering any sponsorship or programming ideas, really, Rick is extremely easy to work with. No idea is off the table with him, and it really does provide a great platform for everyone to try to get content, especially now that we're finding that, you know, we all have Zoom fatigue, but we still need content to try to make ourselves better. So thank you. A big shout out to Rick Kaplan and the New England Real Estate Journal. So I would like to get into this. Thank you all for your participation. Once again, I get it. We're all Zoomed out. We're all COVIDed out. We all have COVID and Zoom fatigue. So we want to try to get into this. We want to try to make it interactive. I'm really lucky. We have a phenomenal panel. We all kind of commingle and know each other. And we've had some great conversations offline that I think are going to make this a pretty exciting conversation for everyone in the audience. Use your chat, use your Q&A live time. If something comes up and you want to ask a question, get it off to me. And there's plenty of us here that should be able to monitor that and get some questions. We'll interrupt and stop what we're doing just to help you and answer questions. So we are presenting today West of Boston Opportunities, Advantages, and Market Updates. We really ended up in Worcester County. By no means of the folks that are here, and there's a lot going on in Worcester County. Once again, we've had offline conversations that I absolutely think this is going to be an in-person event as soon as we're able to do so. There is a lot going on throughout Worcester County, and it really ties in nicely to that concept of opportunities and advantages, right? Not everything is down in Boston or over in Boston. So, you know, and I grew up in West Boylston, Mass, for anyone that's in the area, and I'm up in Bedford, New Hampshire now. So I know the stomping grounds well. I still go back there quite a bit. But without further ado, let me get into some introductions and get our panelists going. And I'll make sure to remind Paul and Shiloh, you guys are muted, so ping me off mute. And for the meantime, while I have Matt active, I know for sure, I'd like to introduce to you Matt Mayrand, CCIM. He's a vice president and broker with NEI, Glickman, Cavago, and Jacobs in Worcester. Matt, listen, thank you so much for your time. Why don't you tell us a little bit about what you do with NEI?
Great, Dave, thanks very much. New England Real Estate Journal, thank you. I've read it for a long time, so I'm happy to participate in the panel today. I've been a broker in Worcester now for just about 19 years. I spent 15 years with Keller Sadowski, another brokerage firm in Worcester, and the past 4 with NAI, Glickman, Cavago, and Jacobs. Previously, I was more of a generalist for the 15th year, so I have a little bit of background in industrial land development, a tiny bit in retail and office. In the past 4 years, I've spent the majority of my time focused on office space in particular, and then also investment opportunities with a heavier focus on multifamily investment. And in the past decade, I formed May Property Management, which is a full service management company working with condominium associations and multifamily investment in Worcester County.
Excellent, thank you. And I'd like to go over to Paul DiGeronimo, CCIM, owner and operator with Geronimo Properties in Leominster. Paul, thank you for your time today.
Thank you, David. This is a great program, and I've been on a handful of these, and they're well done. I'm Paul DiGeronimo with Geronimo Properties, and we like to say we create robust marketplaces. I've been in the industry for 35 years, way too long. This is now my fourth shutdown, not shutdown, slowdown. Shutdown, we've only gone through one so far. But when this first happened, it gave confidence that we've been through it before, we can go through it again. And here we are. I think it's a little bit different than anywhere else. Just a little story is that in '91, when we had a major slowdown, we got rid of all our industrial properties and we focused much onto retail. Well, a friend of mine went the opposite direction and he went industrial. And I thought, how boring, how sedate, static, and retail is dynamic. And who would imagine 40 years later, 30 years later, that now the hot product is industrial and warehousing, and now retail is going through quite a change.
Excellent. Thank you, Paul. And certainly last but not least, and we think a lot of what we talk about today may revolve around Shyla. Her involvement with mass development is pretty interesting. Once again, us as a group here have had some offline conversations, and you know, we seem to be orbiting around everything that mass development does. So Shyla Rufer-Matthews, CCIM, Vice President of Community Development with Mass Development out of the Worcester office. Shyla, thank you so much for your time today and joining us.
Thank you. Thank you very much to the New England CCIM chapter, and to you, President Dave Gambasini. I can say it. Gambasini. And I really appreciate this, and I appreciate Rip Kaplan and the New England Real Estate Journal giving us the opportunity to kind of bring this topic to light. Because I feel like we're having this conversation maybe 5 years too late, actually. Yeah. It really, everything has already happened. If you're not here, you're not in it, you know, and I really wish everybody could see what's going on. And I'm glad that we have this platform to talk about it. I'm the Central Region Community Development Officer at Mass Development. Along with I administer the Brownfields Redevelopment Fund in the region. I also work, and I saw that there's lots of interest in sort of clean energy and brownfields and environmental work. So I'll speak to that a little bit more into the future. But I also work to improve and strengthen the cultural identity and enhance the innovation infrastructure in the communities in the region. And we can get into a little bit more about what that means, but we really, everything we do is to spur further public and private investment into these communities. Our agency is really complex, and so it's hard to nail down exactly what all we can do, but ultimately what we do and why we do it are quite similar in all aspects. It's all about community impact. Our services set transformation in motion. As one transaction usually and most often will inspire a ripple effect of community growth throughout that area. So just a little bit about mass development, because sometimes people, you know, are we finance? Are we economic development? So since 1998, Mass Development has served as the state's economic development and finance agency. We provide real estate and financing solutions to lenders, developers, and job creators throughout the Commonwealth. I've been with the agency for 14 years, having worked in corporate and commercial real estate prior to that time. So that's when I got my CCIM, really working in that field back when, too many years ago. I told them I'm not going to give them my CCIM number because it's been too long. But my father was one of the founding members of the chapter. So I really appreciate this opportunity. I think in every town and every community, we see opportunity. And I'm really happy to be here today to talk about the opportunities we see here west of us.
Excellent, thank you. And once again, for the audience, you know, we don't want this conversation to be about COVID, right? We don't have a choice. It is part of what we're dealing with now. So we're certainly not here to give into any economic or political pressures regarding the topic, but certainly it's shaping what we all do for a business. You know, it doesn't matter what part of the business you're in, it's playing an impact. So we certainly hope to bring to light some of the opportunities that might still be available or are still available as a result. And really with a great mix of what Mass Development's doing, what Paul's doing with investing in retail, and what Matt's been able to do with NAI in the office side, I think we have a real compelling story to help, have folks, understand a little bit more and start asking questions, right? The takeaway here would be that folks that are watching us have questions, and if we don't get them answered here, you and the audience might be able to reach, Shyla, Matt, or Paul directly, get some further information and figure out how to help your clients. Shyla, I want to start with you because, like I said, I know a lot of what we talk about today could kind of revolve around some of what mass development is doing. And I know your organization is extremely complex. I took a dive into the press releases, and it's daunting. There's a lot. You guys do a lot. As far as the finances in the programs that you guys provide, what do you think has been most important to further the development opportunities, basically anywhere in this west of Boston region that we're in?
Yeah, it's hard sometimes to figure out, but I think the best thing is to call us early on a development project. But what you often see in our press releases are terms like participation or guarantees, and they're all preparation products like our brownfields, administering the Brownfields Redevelopment Fund for these projects to strengthen them. So what I think is the strongest point of what we can do is to come in early and figure out, where do we fit? How can we provide site readiness to a project? How can we provide that guarantee, or how can we strengthen your project to make it successful into this environment? And I think it's most important in what you're saying. It's a fluid environment right now with COVID. And I think understanding when you're developing a project, a lot of the projects that we've done in the region have been strengthened because of the early involvement of mass development. And preparing the sites. Way back when we started Gateway Park, to prepare that with our Brownfields Redevelopment Fund, and then come in with additional layers of financing through that. You are seeing all the offshoots of that first investment. And then we've done that again at Polar Park. We've done that again up in Fitchburg. We've done that again. It's over and over where we come in early and we continue to layer on our products to the project. And I think it's the strength of the team here in Worcester. I have a team of 5 members that does the bond financing and the lending, and I do the pre-development work. So I think that's really our strength. Call us early.
Great. And you touch a lot too on the financing side of things. And Paul, I know you're quite involved on the investor side.
Yeah.
And I know you and I talked a little bit about private sector funding. What are some of your observations of the trends and the funding trends regarding the private sector? What are you seeing?
So what I've seen in the past couple of months is when COVID first hit, I know this isn't a conversation about COVID, but when COVID first hit, nobody knew what the value of real estate was going to be. The shutdown was unknown, cash flows were stopped, and everybody seemed to be on the sideline. But my observation has been, as there's so much liquidity into the markets right now, but through the government and other aspects, that there is a lot of money on the sideline starting to be ready for investment. It appears that private investors are starting to gather to perceive that there's going to be some fire sales, which I don't think is really the case coming. But there is plenty of private equity raising capital so they can invest into fire sales. But the good side also is that the banks are starting to come back and they're starting to lend again. The rates are, and we can talk about it a little further, but the spread between the cap rates and the interest rates are the widest they've ever been. And so I think there's a lot of possibilities for investment moving forward. So there's plenty of liquidity out there for investment.
Sure. And Matt, I'll hit you with more of a broad question. Just trying to get your take. You're doing a lot really heavily in the Worcester area. When you think of the Worcester market itself, what do you see as a kind of a long-term outlook for the Worcester area?
Yeah, it's interesting. Shyla brought up a couple of really good points, but Gateway Park, I'm curious how long ago it was, but I think it was a while. And, so Worcester's like an overnight success, but it just took us 30 years to get there, And but so a lot of those programs are really starting to come through fruition. And really, over the past 20, 30 years, I've been involved in this area. I've never seen so much interest in Worcester, and now there's so much infrastructure, and there's a lot that Worcester has to offer, and we're starting to see real smart money start coming into Worcester, which has really never happened in the past. In preparation for this, I talked to a number of different developers and owners, and everybody is very, very optimistic about Worcester long term, and I am as well. I think it's a terrific opportunity long term. 12 months, things are going to be a little bit funny, but nobody has really changed their long term outlook on Worcester with anything that's been happening recently.
And when you say Worcester, do you mean Worcester the city, or do you think as the county? What do you see as that ripple effect from Worcester outward?
Sure. So I think of it as a greater Worcester area. Metro West, Shrewsbury is a little bit different. That's really kind of a in-between area where it's not really a submarket of Boston, but it's not really a submarket of Worcester. So I'm thinking of kind of Worcester and maybe 15 miles out.
And Paul, same thing with you. I mean, your office is in Leominster, and I know you do business throughout the area. What are you seeing, kind of going off what Matt's saying, as far as Worcester versus, the epicenter as you get further out? If we start trying to bridge the gap between Worcester County and, say, the Boston market, are you seeing, a transition somewhere in the middle, and is it good, bad, or indifferent depending on where you go?
So there is a connection between Worcester and Leominster. Much of our development's up in the North County. And that is because the growth of Worcester is starting to put pressure on the residential market, that people are now seeking, we'll call it the North County, to reside in Leominster, Fitchburg, North Central Massachusetts. We also have developments in Air, and what we're seeing is this suburban movement out of Boston, and it's been going on for more than 6 months, been going on for 4 or 5 years, where the millennials are now at an age group where they want to start to push out and they want to go to suburbia. So the suburban market's getting stronger and stronger. And North Central, I'm going to sell North Central Massachusetts a little bit. It's the most inexpensive area in New England to live. The jobs are diversified. There's 23% of our jobs are in manufacturing, which is high for any economy that we've seen. So there's a lot of positive. The Devon growth that Mass Development did out at Devon really has helped that area. And so there's a lot of going on, and it's really a nice blend of things that are coming together. But the residential in Leominster or North Central Mass is less expensive than both Worcester in the Boston area, so people are starting to go out there. You're really seeing that out in the air. You're seeing that in Central Massachusetts.
Sure, and not, it can't be understated enough. The residential market and really what's going on because of this pandemic is a very real factor in everything that we're doing. I have a large development project in Hyde Park, New York. Hyde Park, New York is 90 minutes north of Manhattan. And there is when we started the project, I mean, it's a 2 million square foot mixed use project that was supposed to be 50% residential, 50% commercial. And we were already getting pressure and questions of the developer to maybe provide more residential. And as a result of COVID, the town officials literally came to the developer and said, look, there's such an influx of demand in that Hyde Park area. Would you consider greater, more residential? So we are now, 65% residential, versus 50. So that demand on residential is shaping everything, and there it is for a mixed use development. So, certainly not to be understated. Shiloh, I want to circle back to something you had mentioned, and this is a question from the audience. By the way, you can ask your questions anonymously. That's fine. I'm not going to identify anyone. Shiloh, you mentioned that you're involved in brownfield tax credits. Do you anticipate any changes to the availability of state funds, more or less, for the program in 2021?
So specifically, we handle mass development as the administrator of the Brownfields Redevelopment Fund, which provides direct financing for the assessment and remediation of brownfields across the Commonwealth. The Brownfields Tax Credit Program is actually a separate part of the Act of 1998, which is the Brownfields Act, which provides the tax credits. 25% remediation costs. We currently have enough liquidity to handle projects within the Brownfields Redevelopment Fund. We encourage you to come in. I'm currently reviewing a project right now in northern Worcester County for housing that's using brownfields funds for assessment work. It's a great way to leverage your projects. The state has provided these tools to allow you to go in and assess a project utilizing these funds, which are loan funds to commercial developers, but it allows you to leverage that money outside of your construction financing. So you're basically putting less at risk in your construction financing when you're doing your assessment work. So we can go up to $100,000 to look at assessment of properties, and that has 0% financing on it. And then we can also look at your projects. So I encourage everybody to come forward. And as I was saying earlier, the earlier you get to us with your projects and looking at those projects, I know while I said we should have had this conversation 5 years ago for Worcester, we are at the absolute perfect time to have these discussions, go into Fitchburg, Leominster, and Gardner, and to the outlying regions of Ashburn and Winchendon, really looking at those areas that have the transit, they have the commuter lines into the city. And so, when we start using, there's so many development opportunities, and you really look at leveraging those development that we can offer.
All right, excellent. Paul, another question that came in from the audience. Are you seeing retail developers begin to target a different tenant mix? Pre-COVID, it appeared retail centers were gravitating toward restaurants and other entertainment-related tenants to bring in crowds. Will there now be a shift towards essential businesses?
I want to answer that a little bit differently. We now have to think of these centers as not as shopping centers. I think you're going to see that term not being used anymore. They're going to be commerce centers. So what does that mean? That means that we are obviously going to have the medical, we're going to have the typical retail, the service retailers. We're always going to have the grocery stores. We're going to have the necessity retailers. We're going to have the liquor stores and the sub shops and the restaurants. We need, and don't forget what real estate is. Real estate fulfills a need of a community. What are those needs of the community? We never thought that Amazon would be getting our hard goods coming in from the mail, but we still have demands. We still have medical demands. We still have entertainment demands. We still have physical fitness and those type of things. So we need to now think of these centers as a center of commerce and not a center of shopping. So what we're going to be bringing into these centers is, we all know the mixed use with the multifamily coming in. That's an obvious use that we're all looking at these properties. But we're also bringing in medical uses, which has been going on for a long time. New England, we never had medical users in our strip centers. We just never put that together. You go to the west, you go to the south, the doctors, the high-end restaurants are in strip centers, and we don't take care of that. So those are some of the things that we're going to be going into it. We have one of our centers, we're actually looking at a region where that might be an area in the center that might actually become flex space, where the showroom might be in the front, but the trades are out back working in the flex space. So we kind of have to absolutely think out of the box. Where do these centers go? But retail is a business, or real estate is a business that fulfills a need. And what does that area need to how do we fill those needs for that area? So that's where I think we're going. We're going into a commerce center and not so much as a retail.
Sure, and you touched on something that's, I think, pretty important. I'm going to come up to you, Matt. I did read recently in CoStar that there's some large REITs that are starting to double down. I think actually BlackRock is doubling down on medical office, and they're starting to realize, once again, because of the pandemic, that maybe there hasn't been as significant attention given to medical office needs. Maybe not so much in the practicing, but also in understanding how to facilitate all these new programs. Are you seeing changes? What are you seeing as far as, let's say, medical office specific, and then if you want to drag it out and all into office, but medical office specific, are you seeing a difference in usage, demand, or that market segment?
Sure. So that market has changed a little bit over the long period. You know, the private individual physician groups are really, you know, all becoming part of these larger medical institutions. So in this area, Reliant, UMass, St. Vincent's Hospital are really the three large groups that are doing the majority of the leasing these days, as opposed to, you know, a physician putting out a shingle. So that's been a trend that will continue. You know, certainly COVID has put things, you know, a little bit slower, but that is really kind of back up to speed. Surgeons are operating again. You know, the volume of business is still there. Everything is good there. I actually represent Hudson Advisors. They're the asset management firm of a large REIT based in New York and Texas, and the asset that I'm selling for them is down in Webster, Mass. It's a 25,000 square foot office building, medical office building down there, and they bought Reliant's old portfolio, and this is one of the few assets left that hasn't already been sold, and they're getting ready to close out their fund, so they're looking to basically liquidate one of these few final assets. But the reason they're doing that is because they have a new fund. You know, and the new fund is going to go and probably take on a slightly different slant, but, you know, find undervalued medical opportunities or maybe, you know, other office opportunities, and then kind of improve them and reposition them with bond financing, some of the other things that they use.
Okay. So, and you, once again, you gave me a great point to kind of carry. We do have a question, and I'll tie this into the question in a second. You mentioned opportunity zones and some of the funds. You know, I've recently been brought into a few projects, and we're finding out on the developer side that the opportunity zones weren't quite what they thought it was. And let me say differently, the opportunity funds that companies were coming up with and these investors were coming up with weren't quite ready to do what they thought they were going to do, and they didn't have the money invested and ready to distribute the way they expected, because there was a lot of hesitation in the market. So these opportunity funds that supposedly exist that are ready to invest into an opportunity zone haven't really kind of performed the way that people thought, which now goes into the question. And I think actually, maybe this is for you, Shyla. The question is, it appears that a significant portion of downtown Worcester is located in an opportunity zone. Have you seen activity for qualified opportunity zone developments? If so, what types of developments have you seen success with this program?
Well, I'm going to dance a little bit around that. Yes, it is an opportunity zone. So it definitely, we did see investment based on that opportunity zone with several large investors who did buy up some properties within the area. I'm going to redirect you and say that I think as a Commonwealth, we have some other tools that are really, really powerful for you as investors and developers. And I think looking and watching to see where the Housing Development Incentive Program, it overlays into downtowns. You have Worcester, Leominster, and Fitchburg that have the HDIP to help you put in some funding into your developments. And then I'm going to kind of point you to our new rollout of PACE, which is the Property Assessed Clean Energy for commercial buildings. It's a new mechanism to finance energy improvements for properties. And I feel like these are powerful tools that we have as a Commonwealth that can spur this development. I think this is why we're seeing some development, more so than sort of looking at your opportunity zones or different things like that. I really feel that those are the ones that are really moving the needle on creating what you brought up earlier, Dave, which is essential to how we've had this growth in this region has been our housing stock, and really looking towards the future and creating more density in our housing. And that's crucial. Just along with some of the development we've mentioned here, we've talked about Gateway Park earlier, but we haven't touched about on the biomanufacturing that's coming in. And really, you're looking at one site in Worcester just bringing in 300 new jobs with the reactory. You're really touching on things that are bringing in huge amounts of employment base. We have to have more density in housing, and we're not there yet. In Worcester, we're not there yet. In any parts of this part of the Metro West, we're not there anywhere to meet the demand. So we really are trying to layer on as many tools as we can to help create and spur that housing.
And with projects, and we're going to start, I think, getting into that. And I know there's a few substantial projects worth mentioning, but in general, you mentioned the reactory. When something like the reactory comes to the area, and Paul, I'll come to you. We understand that the reactory could itself create 300 jobs, and we understand that the demand on the residential side is housing, maybe even, offshoots of it are affordable housing. But what impact do you see? And this could be challenging because we're in this time of a pandemic, but either pandemic or otherwise. Paul, where do you see, or do you see a change in demand for something like retail? If something like the reactory is coming in and setting up shop, is there an offshoot? And then Matt, you can spin off this too with office. I would think medical office, right? You can start thinking that through. But first, Paul, let's go to you and find out, where do you see a change in demand for something like retail? Or once again, it may not be retail, it may be commerce. So what are you seeing as an impact for something like just the refractory?
So we used to think jobs, you start with jobs, the jobs come, then the housing comes, then the retail comes. So that used to be the flow. We have to have jobs to create the residents, then we need to fulfill the residents' needs. I think that's changing, and it might be changing for the long run. Jobs can be anywhere. There must be some statistic out there that says so many people do not have to work in an office anymore. So people are going to go to lifestyle first. So what fulfills that lifestyle? We have a gentleman who worked out of Waltham, just left his apartment and moved to Wolfboro, New Hampshire. He doesn't have to be in Waltham anymore. He wanted the lifestyle of central New Hampshire. So we don't have to, more and more people don't need to be locked into a location. So it's going to be lifestyle. Now the inner city provides a great lifestyle that we all want, but people don't need to be there now, but people don't need to be there for the jobs anymore. So I think that it's going to shift to lifestyles. What is Central Massachusetts, what does Worcester County provide? There's been a huge investment. The rail trail that's going into northern Worcester County, that brings in lifestyle. The Mount Wachusett is a great asset to that area. Less traffic is a quality of life, lower cost of living. So I think that's what's going to be drawing the residents, not so much jobs anymore. It's important to get 300 jobs at a biotech. I'm not discounting that at all, but that 300 jobs at that location may spur on other people in the whole region because they don't have to be there daily anymore. So retail, again, is going to fulfill the needs, and I think it becomes a lifestyle situation that brings forward.
And
it's like a softball.
Once again, being that
I'm sorry.
It's like a softball to me.
Yeah.
It's really important, Paul, and you've touched on something that's incredibly important to mass development, to the Commonwealth of Massachusetts, is really creating that creative communities and understanding that where people want to live, and that creating space, creating place. And that's the work that we've been doing in Fitchburg and Worcester in our transformative development.
Well, in here you put the new commuter parking lot in. That's a fabulous, that town, of any town, well, maybe I shouldn't say it that way, but what a transformation of air over the last 20 years from what it was 20 years ago to where it is, nothing but excitement. And it provides a lifestyle still outside the suburb of Boston, but out a little bit further out. And the commute in is becoming more and more reasonable. Leominster has invested a lot into their open space. And it can go on and on. And Fitchburg has Riverwalk and other things they're trying to do down there. So I think quality of life is going to, people are moving to Vermont, people are moving to New Hampshire. There's a whole different spirit right now of what people can do about jobs, which helps Central Massachusetts, because the quality of life in Central Massachusetts is much different than as you get closer to Boston.
Yeah, I think Paul's right. He, the other part of that though is the educated workforce, right? So Worcester is fortunate in that we have so many universities around. We really do have that educated workforce that can take on these PhD level jobs in biotech, right? So some other areas of the country, other parts of the Commonwealth might not have that additional benefit. So I think, Galaxy Life Sciences, who really taking a substantial bet on this whole project, 43 acres, 8 pad sites. They're getting ready to start a spec building, a 95,000 square foot spec building. And so, they're really optimistic about the demographics that we can bring in the business and have enough workers to take care of that high level employment.
So Matt, keep going with that. There's, we've talked a little bit about some of the other projects. We talk about the reactory, but what about we have the Red Sox, right? We have the Red Sox relocating their from Pawtucket up to Worcester, and that's got a significant impact to what's to come in years to come. As far as, that's going to change a lot, right? There's going to be infrastructure. There's going to be a lot that has to go in to accommodate that. Help us understand a little bit from your side of things, and then from there, let's just go there first. Help us understand what you're seeing on side from Red Sox, and same thing, Shiloh. If you've got, if you want to chime in on that particular project too, between the reactory and the Red Sox park, we got a lot. There's a lot going on.
So these are all pieces that tell the same story, and Shiloh brought up, the Brownfield initiative, and that was probably one of the starting elements that kind of led to a lot of this. So now we have the reactory, now we have the ballpark. Someone else mentioned too the opportunity zones, 446 Main Street, which is the glass tower. It's pretty emblematic of Worcester downtown, was bought by Synergy Investments about a year ago, and their plan is to use opportunity zone funds in that project. And last October, right around, I was in DC and actually was able to hear someone from Treasury talk about it. And in October, they had a pretty substantial change to the regulation where they really increased the amount of money that had to go into improving these assets. And I think that might have changed things a little bit. I know that there is substantial monies being set aside to renovate 446 Main Street. Pretty much the entire interior is going to be renovated, all the mechanical systems, the elevators, and they're thinking about putting first floor retail, so that's a very significant project. It would certainly reshape downtown over the next 2 or 3 years. But also, the Red Sox, it's been a phenomenal interest. A lot of that work has been happening for a while. I met a fella down there maybe 17, 18 years ago, and he was one of the first guys to buy property on Water Street and kind of get the ball rolling. Slowly, some nightclubs and other things came on, but it really took many, many years to get it to a place where anybody would even think of putting a ballpark there, right? And now with the ballpark, it's like a gold rush. Everybody's running around trying to find any parcel in that area. There's a lot of excitement. The public market is open. The whole area is very vibrant now. And now we're working on, well, what do we do with all these cars that want to come here now, right? So that's the next hurdle, is trying to accommodate parking in this area. But and then Madison Properties is building a significant project across the street and next to the ballpark, which will include hotels, office space, and also residential. Again, in the next 2 years, there's going to be even more changes to Worcester, all for the better.
And this is interesting too. We've got another question that I think is great, right? This is a COVID specific question that I don't know that anyone knows the answer, but The question is, do we have enough time under our belt to understand the rental rate impact in the Metro West market as a result from COVID? If so, what is the impact by sector or asset type? So I guess, have we seen enough from, let's say, March till now to know what that impact might be?
We don't know completely, but we do have some pretty good indicators, and we can use other recessions. And I'm going to speak just to the office market, but Metro West has been pretty weak office market ever since the dot-com boom, believe it or not. It never really fully bounced back. Its vacancy was like at 20%. It went back up to probably about 8%. And now it's probably retreating back towards that 20% number. There's an opportunity there. There's a lot of high quality buildings and good locations that might become available. So I think investors will start looking at those in the next 12 months or so. Worcester, I was doing deals that were in between, before the pandemic hit and then after the pandemic hit, right? So I can only talk to you about a few deals that I've been in, but at 446 Main Street, we were pushing the limits in Worcester for office rents, and we were getting close to $32 a square foot fully gross for a professional office space with a nice build out. And then that deal actually kind of blew up, and we ended up doing a deal in a slightly different building for $21, $22. So we were pushing the upper limits of 30, which was really kind of setting new market highs. And now we're kind of retracing back to kind of the mean average of what office leasing is in Worcester, which is kind of low teens, high 20s. There is some excess inventory in the market for office. But again, I think after we kind of get through the next 12 or 18 months, I think that will find a pretty happy medium. I do think people are going to start coming back to the office. I don't think that this is a permanent trend in all market segments. Technology, I think it is, but attorneys, insurance companies, a lot of these, will come back to the professional office environment.
All right, so here's another, there's something else that often
Can
comes
I
up.
jump in on that market
Yeah, go for
rent question? I'm mostly positive of what's going to be going on in the future. But right now, Jeff Sterney and I were talking this morning, there is unemployment has not started to get pushed down yet in Massachusetts. And the longer that stays elevated, the longer that's going to be a situation to come through. So unemployment, consumer behavior is changing quickly. We all knew that consumer behavior was changing, but this just accelerated over the period of time. So there's going to be some real changes. Even with any kind of property type, there is the now famous K rebound. Some property types are going to be skyrocketing. You mentioned on a couple of them, the industrial. Some of them are going to have a harder time recovering. And let's say the enclosed mall is one of them. So there's two different kind of economies going on in every sector. So we don't know which ones are going to rebound and not. Also what's happening is real estate is transformational. So the developers, the property owners have to anticipate they are going to have to make changes to their property, which will kind of shift the demand, which will have property change market rents. So there's a huge change going on, and everything is just fluid at this point. So I think we still have a little bit, and no matter what, we're all talking about 90-day segments and 66-month segments. We've always been doing that, but we all seem very, in my world that I talk to everybody, everyone seems to be very confident right now, but they don't know what's happening a month or 6 months from now. So I think that plays out in market rents.
Yeah, and I just listened to a, what is it, an epidemiologist? That's the right person I was listening to this morning. And they're saying, the next 6 to 12 weeks, we could see a significant negative impact in everything COVID related. So, I think you're right, Paul, in that I think we've reached a certain level of resiliency, right? We think we know everything about COVID, and oh yeah, we're getting close. I mean, geez, it's October, it's almost November. We'll probably be ready to be done with this soon, but the reality is it is being discussed that really it's July before we hit a sense of normalcy, right? July 2021 before a sense of normalcy. And that's a long time in real estate trends, right? There's a long time in a market to understand what's really going to happen.
And the problem we live in as real estate investors, we all know it's a slow industry. So you were talking, Sheila, that, you know, Worcester, we should have had that conversation like 5 or 10 years ago, you said. What we plan today doesn't come on the market for or minimum 18 months, but it could be 3 years. And so that's the projections that developers and investors have to do. Where do you go for that in the future with things so unsettled? And fast the vaccine. And what is also happening is we're learning how to live with this situation with the virus. So as we all kind of learn the ins and outs of what we can do and can't do, that comes into play as a society and as an individual. But you know, we're in a slow business, and it's hard to project out anytime what's down the road in 2 years, never mind in this environment.
It's true. Matt, I think, brought it up the best about the long-term planning that has to go in. You see all the glitz and glory of what's happening in Worcester right now. That was a 13 to 15-year progression of events. We really have put in the sort of support structures, and that's really what we're looking at as a Commonwealth, to really put those support structures under some of the small businesses and really our downtowns, creating the business improvement, creating the technical assistance we provided to Worcester to create the business improvement district downtown has created that support structure to really bring people again back downtown. And we've been watching the trends of how many people are going back downtown. We have restaurants opening right now. A lot of restaurants are opening downtown Worcester. They are seeing an uptick in people coming out. So the resiliency that you speak of, Paul, we need to create the support structures to continue that trend into the future. And I'm bullish, like both of you are, that we have that support there, and we are trying to continue to shore up our small businesses in our downtowns through Commonwealth what we're doing through a lot of the Commonwealth programs, and making sure that we can get through this right now.
Yeah, one of the things I really love to see is all this entrepreneurial spirit that this has really forced all small business owners to really adapt to survive. But it's tremendous, the strength of these people to survive and to succeed. And, you know, I was talking to Mike Jacobs in my office, who's the retail specialist, and he was mentioning many of the food service, so fast food type services, are redoing their business models maybe forever, right? So, you know, certain companies are out there reducing their footprint of sit-down dining. Everybody's looking at drive-ins as a possible solution. Starbucks, you know, certain other retailers who have the drive-through have been hitting it out of the park. A new development in Worcester here, I guess, has the highest producing Starbucks in the state. In part because of their drive-through. And so that idea about takeout food, outdoor dining, you know, ordering over the internet, delivery service, you know, these I think are things to stay, but it's only through this entrepreneurial spirit and this fight to succeed that we're accelerating things that maybe wouldn't quite have hit in the same way, you know, over the next 5 years. And I think that's a real positive thing, because I do think these are good services for customers.
Yeah,
the innovation that some of these people have done, they've adapted, flexibility, there's been resilience. One of the retailers has figured out that he needed to be online and do a better job, but it was labor intense. He has the metric down to 6 items a minute to be posted on the internet. So I probably should go check it out to make sure that's accurate, but those are just the attitudes that we have to take. How do we move forward? It's an exciting, it's a risky time, but it's an exciting time.
It's exciting, and we've talked a lot about the sort of these big titular projects within Worcester, but one of the things that makes Worcester really interesting and the central region really interesting is our cluster of collaborative workspaces, and that's a program that I also administer. But really, the Commonwealth has invested in the innovation infrastructure to ensure this entrepreneurship within the state. And now we have a huge cluster within downtown Worcester of both makerspaces and collaborative workspaces that allows people to continue to grow that innovation that you see from a pandemic like this.
Definitely.
And we've seen a lot leading up to this. You know, the Amazon effect was already happening pre-COVID, and obviously I think it's it's probably catapulted itself because of the pandemic. But when you see the Amazon effect, Shyla, you know, I think what I understand is mass development is obviously there to help developers and project owners. And when you see something like, you know, an Amazon come in and engulf these massive sites, either that need to be redeveloped or just repurposed for their last, you know, for either warehousing, distribution, or last mile delivery, in general, I don't know if asking your opinion is the right thing to do, but how does mass development look at something like that, like an Amazon coming in and occupying just this massive space that may have other opportunities for use? Do you see that as, hey, that's great for development as well, or is it, geez, there's another one that got away to you know, a giant box?
I think I'm going to pivot you away from the term of an Amazon big box coming in, or a large development like that, and show you more that as a Commonwealth, we are trying to create sites that are ready for big companies to come in. So say it's a cross-dock distributor. Doesn't matter who it is, if it's Amazon, we need to have those sites ready. We compete against North Carolina, we compete against all the other regions in the country to try to land some of these big Bristol Myers Squibbs up in Devons. We want to have those site pad readies for those projects to come to us. The worst thing that can happen to us as the Commonwealth is not being prepared and ready for a 13 to 50 acre site that somebody needs with large infrastructure needs. So we have, Governor Baker has ensured that we're looking at that site readiness throughout the Commonwealth, and that we're ready at a moment's notice to be able to prepare those sites for somebody to develop. So regardless of who it is, we want to ensure that we as a Commonwealth can accommodate the developer that's coming in and looking for those sites. So, if that answers your question.
No, that's fine. And that's I specifically ask it that way too, because it was not an agenda pro or con Amazon, but that concept of someone like an Amazon coming in for that reason, right? So I think you answered it in a way that was probably a more positive influence on the results to the Commonwealth versus, well, geez, yeah, they're taking up a 50 acre site. So I think that's what's important. You know, that's a big plus as far as what you guys are doing with mass development and preparing, you know, the readiness. I mean, you know, we deal with it in New Hampshire as well, trying to understand how to get some of these large manufacturing and development companies. And, you know, for a long time, it was thought that New Hampshire was a place to go until they realized our energy costs are through the roof. And we've had so many issues with companies that have made decisions to leave because of that, you know, and or, you know, the competition. I think, you know, I don't know that New Hampshire was really ever in the mix for Amazon, but there are those opportunities that exist for these large companies. And just like you said, the Carolinas, right, the Sun Belt is killing it. The Kentuckys, the Tennessee, right, any of those areas. You know, I know CCIM's down there, and, you know, they talk about some of these massive companies, these manufacturing companies, distribution companies that come in that you know, that are occupying these massive sites, and it's incredible tax revenue for those areas in those states.
Yeah, and I think that you want to have the proper site, and you want to have the sites that are ready and that are permit ready for companies. And I think that's where the strength of, you guys mentioned Devons, and the strength of Devons be make sure that we're ready, you know, and permit ready for everything to come in that we want to have for job growth in the Commonwealth.
Sure, I got a couple of questions I want to get to. I'm going to pull them together as one, and they may be something more for Matt and Paul. They're kind of real estate specific. As it relates to offices and medical office use, and Matt, this may be good for you, special modifications to the structures that might be needed to convert to medical use. My guess is perhaps to understand if there's an opportunity to present that to clients that have office space that might want to capitalize on that. And the next side of it, which they could tie in together, I think we see this a lot, I think it's come up a lot, is indoor air quality. And the question is, do you see interest in indoor air quality as a concern when leasing new spaces? Are tenants willing to pay for better ventilation or on air quality?
So I guess, you know, to the first question, you know, medical office is really kind of special in that it's a heavy traffic office user, so that it needs to have good parking. That's a big element of it. Most of the medical groups, the physician groups, have a pretty standard prototype of what they're looking for. So, and they're in it for the long haul. So many of them are not looking for second generation space. You know, they want to build it fresh. They sign 10-year leases because of the cost. You know, medical build out right now can run probably anywhere from 70 to 150,000, 150 a square foot. So, you know, it's a pretty sizable investment in tenant improvement. So that's not including the base, you know, the base building. And, you know, they are looking for ease of access. Many want first floor. And they have, you know, a certain number of sizes depending on how many physicians they have in the group and the specialties. That being said, Reliant out in this area have released all new space. They backed out of every office space and redid all of it. And they have a pretty special prototype that they've been working on over the years specific to them. So, you know, like retail or any other specialty, you know, each one of the tenants have their own special mix that they're looking for, you know, to make sure their customers are addressed well.
Paul, anything to add to that?
Well, to shift to that, the reason we think strip centers, the typical strip centers, the boxes lined up, in the smaller boxes are going to be reused is because they're individual. So medical users and others, they don't have to go into a common area. They don't have to open doors. It's one door in and one door out. And in each of the HVACs are individual. But also when you shift that over to the residential, we have a small residential project going on. They're duplexes. People have individual doors to go in, and that seems to be popular because they don't have to go into a common area. People don't know what they're touching, the handles and things, simple things like that. There's an air exchange in a 24 unit apartment building or bigger. There's an air exchange that is not isolated. So I think people are looking for their own entry, and just the less they can touch things and less they're in common areas, the better off they are. And that's one of the reasons right now we're at 99% occupancy in our whole portfolio. And we think that's part of the reason that medical users are looking at strip centers. First of all, their convenience. All retail, when we repurpose them, they're still in that retail location on Main and Main or right off the ramps. And that's still important for medical customers or anybody else. And the individual units can be repurposed a lot easier than a massive tower, let's say.
And retail has the parking that they need where professional office may not.
So why is Amazon doing so well? It's convenience. What do Americans always seek? They're seeking more and more convenience. That's why the location at Main and Main or right off the highway is important. And parking, where no matter what we try to do to be pedestrians, walk more, we're always near our car. So those are the type of things that will always drive customers to centers. And now we have to realize how we can utilize that asset to repurpose them.
So I'm going to, I'll do a quick check-in of the time. I know it's 2:25. We want to try to wrap up at 2:30. I've done this enough with Rick to know that when he shows back up on the screen, that's his reminder that we're getting close. So to the audience, right, we've got a couple more things to do here, but as to the audience, I want to encourage you to get into the Q&A box that I think you have and ask any questions if you have them, and I'll get them right out. And also to the audience too. I mean, if you guys have found this useful, I mean, this is, you know, very unique opportunity to have the folks on here that we have, and I've appreciated, you know, learning from all of you. And I know that it hasn't been, you know, it hasn't been easy for us to get information. I think you guys brought together a lot of great information at the same time. Here's a great question, Shiloh, that's been sitting here for you. How important is diversity in improving the strength of a potential development proposal?
I think diversity and equity is always important to all projects. And it's something that everyone needs to be conscious of and understanding and supporting our diverse small businesses and supporting all the projects that are downtown and in our downtowns. But I think you also need to think about, how do you want to ensure that you are answering the needs, as we've discussed here, why Amazon is successful, the needs that you're seeing in the community with your project. And I'll leave it at that.
And this question came in, I'm trying to read it as a question here. Wait. Regarding Devon's, curious about this mixed use community and impact during COVID-19. I'm not sure the exact question. Are you guys seeing a lot come from Devon's? Is that still is that development, is that area, is that still going on as something of impact to the area?
We are still seeing strong development and strong demand for development. I believe we just, we just looked at King Street property is opening a new biomanufacturing facility. I think we're still seeing extreme strength, both in development opportunities within the area. There's still so many different projects that are ongoing. And one of the things we benefited from is that LSPs, environmental work, all the pre-work, that's all considered essential workers. So that's been happening through this whole project. There was only a short period of time that several development projects really stalled for a minute, in Worcester, anything that the city of Worcester was doing, paused some of their projects. Everything else has really been moving. And even that pause didn't even pause the ballpark. It's really still opening next July, 2021. So we're still seeing a strength. I don't know if I answered that correctly.
Okay. And then another question for you, Shyla. Can mass development play a large role in repurposing closed malls?
We definitely, I feel that if developers have the knowledge to come to us and talk to us about different products, if we can't solve it, we can always turn you to somebody else that can solve the problem and try to use our connections. That's what we say to our developer friends. We say, come to us first, come to us early, and we'll try to solve. And if we can't, we'll bring you to somebody who can.
Come for breakfast, stay for lunch.
Yeah.
And last one, I think that snuck in, Matt, are you currently seeing medical office and hospital expansions and renovations, or is everything on pause due to COVID?
Yeah, I mean, there isn't a substantial off-campus presence right now. So it's a little bit paused for new stuff because they really have their hands full right now.
Excellent. And with that, we're at 2:29. I want to give Rick a chance to jump back in here once again. If you guys like this content, if the audience appreciates this, let Paul know, let us know on the panel. I have a feeling we could talk for another hour if we kind of just had a conversation and kept it going. There's a lot of good stuff that comes from Shyla that helps trigger Paul and Matt, and I've been lucky to be able to kind of try to harness this and make it a message for all of you. So, and look, like I said, I think there's an opportunity for an in-person event in the Worcester area, once it's okay to do so. So once again, I want to hand it back to Rick. Thank you, Matt. Thank you, Shyla. Thank you, Paul.
Thank you, Dave.
Audience, I appreciate your time and giving us a chance to share some information. So Rick, back to you. Thank you.
Thank you, Dave. Great job as always. I want to thank the panel. They all did an excellent job. And you know what? I think it was overdue. We should have had one of these events for West of Boston probably 2-3 years ago. So I do appreciate all the information. One thing I was very surprised is that Amazon was only mentioned twice in the whole thing. I don't usually do this when only hear Amazon named twice. It's usually right from the beginning. Amazon, Amazon, Amazon. So that was great. There was a lot of new information that we got today.
Rick, if I could jump in, I think that Central Massachusetts is the opportunity for the state of Massachusetts, for the state. There's educated workplace. It's affordable. It's the roads are well structured out there. I think you're going to, once you, the secret's out of the bag for Worcester, but the rest of the region is just wide open, and there is nothing but excitement happening in central Massachusetts.
Mic drop, mic drop.
Boom.
Well, you know, tomorrow I have another webinar that is for just strictly the town of Burlington, Mass. They wanted to put it on to spotlight and to tell everyone what is going on and that they're open for business. And, you know, I think it was a great idea for them to want to do that. They contacted me, and we're putting that on, and we've got an enormous amount of attendees coming to see it. So, you know, any town that is looking to try to promote what they do and what they have to offer, it's a great way to do it. Because, you know, one thing that the New England and the New York Real Estate Journal have to offer is that we don't just reach out to one individual group like brokers or construction companies. We reach all of them. So it's been very helpful. And, you know, you talk about the Paw Sox moving to Worcester. Now, what is it? The
Woosocks.
Woosocks.
Welcome to Worcester.
Yeah. So, you know, Pawtucket, when that happened, Pawtucket called me up and said, you know, we need to do something because we now have to find someone that was interested in developing in this area because we had lost so much. We did an event there. Only about 80 people attended, and there were 8 developers standing in line trying to find out what, you know, where do we go? What do we have to do? You know, so it worked out fantastic for them, and that's all it is. It's you're getting the word out, and that's what we do well. And again, I'd like to thank all of you for participating in this. Great information. I think a lot of our attendees must have enjoyed it because a lot of them stayed on for the whole length, which is not very common. And this will also be recorded. So it will be, if someone missed it, they can see this on the New England Real Estate Journal website or on our YouTube channel. I also want to thank all our sponsors for today, our partner for this event, CCIM New England, Geronimo Commercial Properties, and Excel Capital Partners. I want to thank you all, and I want to wish everyone a happy, safe, what is it, Tuesday? Have a great day.
Thank you for watching today's interview. If you'd like to be a guest, a sponsor, or even advertise in the New England Real Estate Journal, you'll find our contact information in the description box below. You can also find all our social media platforms so you can follow us, and please subscribe to our YouTube channel.